Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone midday, which makes it 1100 UTC. Huge shout out to everybody that's joining the stream live today. We got loads of viewers on today, which is awesome. Thank you all very much. And also to everybody that has been watching these on catch up. So, how are we all doing today? Hope you all had a nice weekend. Took some time to refresh, get ready for a big week ahead. Think we could see some decent low time frame moves this week. As we can see from what's on the screen at the moment, we can see price really kind of compressing up at the moment. And I want to kind of follow on and start with Bitcoin, following on from last night's Bitcoin report. So if everybody can hear me okay, you can see the screen okay and everything, let's crack on. If there's any issues, please do let me know, guys. So what have we got here and what are we interested in? So let's do what we do. Let's take a look starting on the weekly. All right. So the blue or teal levels here are the key points of interest for me in terms of where we want to see price run. Why these levels? Because for me, this is the kind of cleanest level here where we can see that stop the market there. Price ran above this level, closed below it. Then we had this big sell-off. So we confirm this as a deviation or a fake out. And then this level at the low here, we can see where price kind of ran down to here. Okay, we had a reaction again when it's run these lows. We've come back up again. Now we've run it again. We've kind of taken out that liquidity and we're back within this range, right? So these are kind of our weekly levels that we're looking at. Also, something that I do find interesting with these is if we draw this right back, we're almost, in the same level that we can see here. So we can see resistance, blown through it, retested it as support, sold up. This turned out to be a higher time frame deviation. Price then came back within this level, retested it for the sell-off. All right. So that is always something to consider, guys. But in terms of recency, I do like to look for the most recent levels. So just to give you some context in terms of what I'm looking for on a weekly scale. Okay. Now then, on a daily scale, which we can see here, we can see how price is trading within this range. What we've got added here is our daily inside bar, right? So for anybody that doesn't know, the inside bar pattern is made up by a larger candle. This one here, the following candle has to close within the high and low or the range of the previous candle. When this candle closes, these two candles become the inside bar pattern, all right? And then this one's called the mother bar. This one's called the inside bar. So inside bar high is the IBH. And the IBL is the inside bar low. Kazma, my beautiful, beautiful friend, what are you doing in Disneyland? Oh, voice not from Disneyland. You're right there, brother. Me and this guy shared some amazing times over at Paris at Beacon, and yeah, just legendary. So much so, I couldn't help myself just talk, because you all know, I'm sure anyone that joins in the stream, I do love to chat, and so much so I lost my voice, which must have been just a nice change for these guys actually to have some peace and quiet. so here we are. So what am I looking for? How do I want to trade this, right? So the key for me, or one of the absolute key things, I want to see key levels get run like we had here. I'm looking for deviations, closes back within a range, in which case we target the far side of the range like we had here when we came down into these lows, swept these lows beautifully, came back with inside the range. Now, the magic for me comes in with divergences, right? So I'm looking for that inconsistency between the data, what we're seeing and what the market's telling us, all right? So we can see, as we've got here, we've got price action coming down to here, we build this bullish divergence. Now, I have some code in this RSI, which has kind of just been hacked around with a little bit. It does fire off quite a few false positives because it picks up on very, very weak hidden divergences and regular divergences, but I always cross-check it with B Pro, right? The Burbicator Pro. So this is what I'm using down here to get my divergences. So I know when we're here and we've closed this out, from this candle, I'm on the lower time frames, I'm hunting for long opportunities, right? And where am I targeting? Well, initially, I'm looking at these highs, right? So same thing for me. I don't just want to target the key high, all right? Here, for example, let me just make that a bigger color. I don't want to just target that one. I'm more interested in knowing where the market's been halted, right? So for me, it's that, right? Because we can see, again, prices come up to here, resistance. Price has basically not been able to confirm a close above there, weakening down, get these small-bodied candles, which SZ, the legend, always says, small-body candles lead to big-body candles, right? So compression, and then we get the sell-off. right? Now, when we have this big impulsive move to the upside, this very, very fast move, when we get inefficiencies like this, meaning that the market has moved up incredibly quickly, then we tend to find that it moves down just as quickly. The same way as when it moves down into this point, when price eventually gets back up into here, then I'll be looking for quite a quick move above here, right? So always the same kind of range playing or level to level principles. I'm looking for price to come and interact with a key level. When it comes in and interacts with a key level, what I'm then looking for is confirmation as to whether it's a deviation or a fake out, in which case if it closes back within the range, we then target the opposite side of the range via the 50% line, which I'll show you when we break this down into the lower time frames. Or if we hold outside and then start to push up, clearing this high, that would give me the confirmation that I need, right? To say, okay, well, if we're breaking out above here, we can hold this level and push higher, then I think we're looking for higher targets, all right? So I know at the moment, this is a pretty big range that we're looking at on the weekly. So this is why we're breaking it down onto the daily. So remember, weekly levels are our blue levels here. Our daily levels are here. So how do we play the inside bar pattern, right? So we've got the mother bar high, mother bar low, inside bar high and low. So what we're looking for, like any range play, is we want to wait for price to interact with our key level. In this case, we can see that price sweeps the low, starts here, sweeps the low, comes back in, closes, takes liquidity below, and then starts to push higher. So let's pop this down onto a 4-hour chart, and I'll show you what I mean in a little bit more detail. So as I said, short-term bullish as of yesterday, as long as we sweep these lows and close back within the range here, which is exactly what we've done. We're going to also take a look at the DXY very shortly as well to show you how we can kind of gather a bit of confidence on that in terms of risk aspect. So where are we at the moment? We're back within the range. I'm loving the fact that we've swept the lows of the mother bar here. We've taken up this liquidity, right? We've come back within. We've closed in here. Now price has worked its way inside the inside bar low. What are we targeting? Well, we're targeting the 50% of the inside bar, right? Which we're going to break down on an even lower time frame. So what am I looking for on this level? Again, what I really wanted to see down here was a divergence, especially on B Pro. We don't have one, right? That for me is normally a really, really key trigger in terms of looking at how we're going to, grab some momentum, right? A little bit of inconsistency, a little bit of uncertainty, grab that momentum and really run with it, okay? We can see the candle we've had here is a little bit indecisive, pushed up, moved back down, kind of closed as a doji. But this one looks like it's developing quite well. It looks like now it's confirmed being inside the inside bar and it's now looking to push up a little bit higher. So actually, normally the 4-hour chart, which is where I really kind of pick my targets, we can see here that actually that is not giving us a clear indication at the moment, all right? Also, if we draw this line across here, the one that we made showing the previous support and resistance, we can see what a key level this has been, all right? So as we can see, resistance here, deviation, sells down to here. Again, we come back up, retest, resistance, can't break above, shows weakness, sells off. Where to find the next pocket of liquidity, which was below these lows. Then we had a huge buying impulse down here, lots of buyers stepping into the market, big impulsive moves up. Got a lot of people long, and I would imagine that a lot of people were kind of, again, people that were late to this were getting long at the wrong point. They're longing into into resistance, and then we have this blast above, even more people, takes out all these stops from the people that were short here, fills the sell orders, and then we have this huge sell-off, right? Now, the sell-off gets us not only back within our weekly range that we've got here that we can see by the top blue line, we're coming back down and we're now within this, right? This support resistance level. So by dragging this across, what we can see is we're looking for confluence, right? So when price pushes up and tags this level, we get our beautiful bearish divergence here on B Pro. When that closes, from this candle on, we can look for opportunities to short, and we've got a beautifully clear target. We can see, again, this weekly level here that stopped and held price so much. So, slightly hesitant this morning. I normally like to watch Monday's range play out before committing, right? So, there's an argument that we've made the low in the Asia session and that London's potentially printed the high. Now, around sort of this time, moving into 1 o'clock, I get super, super interested. In terms of the consistency of high volume that we get when we look at the London and New York exchange crossover, right? So it's normally a time that gives us some really nice price action. So what we want to do really is we want to just be setting ourselves up with our bias. Now, With that in mind, I'm going to drop us very quickly to the hourly, and then we're going to look at it on the lower time frames. So here on the hourly, what we can see is we got our divergence here. So again, stepping into this, what I would have really loved is if we got the 4-hour divergence, just gave us that little bit of extra confirmation for the bullish bias. Then we could have paired those two up. We could have been looking for longs once we came and closed back in here, and we'd be looking to scalp up to these kind of targets. So with that in mind, what I like to do with any range, and what I feel personally is important with any range, is making sure that we mark out our midline. So you can just take a really simple Fibonacci on the 50% level, and then I just like to make that a dashed line, delete that. And now we can see almost like a POC, like a point of control, right? How much interaction this has had. Look how price has just crushed into this tiny little range down here. I mean, even if you're really taking it from the key highs to the lows, less than 1%, right? People just getting chopped up into oblivion in that, which is again why we want to know where our key levels are, right? Because I don't know why you'd be entering trades here and here, unless you're on the micro time frames, you're looking at sweeps of these kind of highs. Then the high probability plays are to wait for price to come into the key levels, right? Take out the liquidity up here or the liquidity down here. And this is what helps us with the inside bar, right? So as we've taken our divergence, we've closed back within the mother bar, right? We've then pushed up, and now we've closed back within the inside bar, right? Now, what we can see is as price deviated here and pushed up, we got rejected at the 50 line here, right? So this morning, when we're sitting down at the chart, we had this big impulse, big bullish engulfing candle that took us back within the range. For me, there's no trade here playing into this level because our stops logically have to go below the prior swing, right? The risk to reward just simply isn't there in the trade. But I can show you how we can gain that kind of bias if we want to trade these things on the real low time frames. But first of all, for me, I think what I want to see is I want to see price do something like this, right? If it then pushes up into here, right, we reclaim this level, we come out, retest it, and then I think we can push higher, in which case we target the inside bar high. I think it gets quite exciting potentially for the bulls above that, because if it doesn't deviate and close back within, I think when we really clear this level, I think we could see quite a fast move up into these highs and then up to the mother bar high as well. All right. So that's what I'm going to be looking for there. At the moment, there's no trade on for me here. We're just kind of floating about in the middle. What we can also see is very, very mild hidden bearish divergence starting to stack here on the RSI. So what would be the bearish scenario? Well, depending on how you draw your trend lines, and for me, I like to, well, not what I like to do. I think you either basically, as long as you stay consistent, you either take them from the extremities, which are the wicks, right? Let me just make that a solid line so you guys can see, and we'll make that blue, right? So you can see you're then playing the extremities, or you can start from an anchor point and draw it in a way whereby you can violate any of the wicks. Yeah. So like with this one, as long as the bodies don't violate the candles in the first kind of, I like to allow 3 touch points, right? So we've got obviously the anchor and then our first and our second. So 1, 2, 3. Then when we get something like this, right, like with any support resistance level play, what we're asking ourselves is really clear here. We're saying, okay, well, is this a deviation? Yeah, a fake out, and is price now looking to push lower? You know, we've set this high, we've now come down, set the low. Is this the lower high that then leads to price selling off? Or have we broken out, found strength here at the inside bar low, and are we now retesting this? So for the bullish scenario, we want to see price come down here, right? Do something like this, get above our level, in which case from here we can start looking for long plays. Or we want to see price break down, okay, test this, come down below these lows, right? In which case then we can start looking for short opportunities here into these lows, which is the mother bar low. Now, I wouldn't take this trade on this kind of time frame because your stops are going to have to be up here, right? And your target's here. So your risk to reward from here to here is less than 1R. We don't even need to measure that to see it, right? But once we know the key levels, right, what we're saying to ourselves is, okay, same principle. In our previous look at this, we wanted to push above the 50 line. If we do that in this instance as well, then we're taking out this high. Yeah. So as price moves up into this level, then we start to see some structure build. That's when we can say to ourselves, okay, once we're above here, let's look for our long triggers on lower time frames, and then we can push that move up higher. So let's drop down just to give you an example, right? And I'll show you this in a little bit more detail with an example with a trade that we took last week, or just an example where the deviations and divergences line up. If we'd had the 4-hour divergence here, what I'd be looking to do is I'd be looking for this here, right, when we closed back in. And then I'd like a little bit of confirmation on the lower time frames as well. So 15 minutes is one of my favorite. We can see here that that we can get the move here and we start to push up. Three Musketeers, great video. I wish I could see your chart better. The size is too small. Sorry, mate. Yeah, great heads up. Do let me know, guys, if this is a little bit small. We can always push this up and zoom in a bit. Hope that is better, buddy. Apologies to anyone if that was a little bit small. So actually now we've got a slightly more detailed view, and hope that's better for you guys. Do let me know in the chat if there's any issues with that or the audio. As we come into here, what we're looking for confluence, right? So what can we use for confluence? We've got our level, we've got our price action, right? We've got, for me personally, I like to use the RSI. It gives me an idea of what momentum's doing. And then I also like to use my divergences, right? Because it's telling me when there's a little imbalance between what we're seeing. Getting a bullish divergence down here on the hourly, price pushes up. We've got confirmation as we're in this uptrend. We're saying, okay, 15-minute guys, we've got the bullish divergence here as well, right? Look where our RSI is. It's down in oversold, meaning that there's upside momentum and upside potential. So price pushes up. We get this beautiful engulfing candle, closes us back within the mother bar. Now we're interested. My dear, dear friend and one of the most exceptional traders that I know, Bast, who's one of my brothers over at The Nest. Do go and check him out, guys. All amazing traders and just wonderful people. But Bast, we always chat about this, always talking about price action, right? And one of the things that he does that I think is absolutely sick is, for me, I'm always quite keen to pull the trigger after an engulfing candle like this, right? But what he does a lot is he's waiting for this confirmation, right? So you see the next candle here is bearish. Well, what he's saying is, right, well, we've got this big bullish move. Wait for the market to prove to you that it's ready to move higher. This is a doji candle, means indecision. This is a bullish hammer candle. We love to see these, right? This is where we start getting really excited. And then we're saying, okay, let's step in here and start looking for longs, right? That's the key play for me on this time frame. I normally enter on a lower time frame structure, right? So I'm looking for, let me show you. If we drop this down to, say, like a 5-minute chart, or to be honest, probably even a 3, which will give us a clearer explanation here. Joe McDonald, thank you very much. Really kind of you to say, bud. Now, I'm going to keep this zoomed out just a little bit here. And in fact, just going to keep this zoomed out a little bit, guys, just so that you can see the structure. So let me just make this bigger. And then we can pull this out, right? So if we're looking at this, right, we've come in and we've set this low. We've set this higher, higher, low, higher, high, right? So this is the break, right? Now, I know that looks awful because it's in black, which isn't very clear, right? But let's take a look at it in terms of a structure on the 1 minute, right? Where we can see it a bit better when we really, really compress the chart. We're going to pop our divergences off. So we've got this really, really nice and crystal. Now, remember, guys, it's all well and good looking at market structure, breaks, how you can enter different things, fair value gap, etc., right? But the most important thing, one of the most important things, in my opinion, is waiting for price to interact with the key level to give us that extra confidence, right? And from there, we can say, okay, well, if we're moving up here into a high time frame or low time frame, bullish structure, what have we got? We've got the low, we've got the high, higher low. What happens? We come along, we take out this high, right? Just really, really simple market structure. We break above it. What do we need to do? We don't want to be FOMOing it up here, right? Just wait for price to come down and give you that retest, right? To say to you, okay, look, it's coming into a key level here. So again, look, we can see these highs, right? Break of market structure. What do we want to see from price? We want to see price come in, all right, find support here, maybe dip down, take the liquidity from the lows, which this has happened here. Then when we come back in and we start closing back above here, right, look at this retest, right? So first of all, we've established the market structure break. Secondly, we've established whether it's going to take this here, which is this, think of this like as an area of consolidation, right? Focusing mainly on the bodies of the candles. So what we're saying is, look, if the price is consolidating here and if the buyers are stepping in, then we want to see a bullish break above it. We want to stop ourselves FOMOing in. Look, if this thing goes to the moon and we don't get a chance to get in, it is what it is. There's always opportunities, guys, right? But don't hurt yourself by getting into trades, too late. And then you're worried, you're anxious about it. Have a system, stick to the system, just be consistent, okay? So price breaks up, shows us with this bullish move here that the impulse is there. There's buyers there. Now, for me, I'm a great believer in market manipulation and institutional buying, whether it's just the way markets work, whether it's manipulated, whatever you want to think it is. For me, if I'm smart money, I'm an institution here and I want to buy, I'm not going to buy here, right? No chance. I want to buy back down here, yeah? So my strategy is to be patient, wait for price to get pushed into these levels, and now we just want price to tell us it's ready, right? Comes in, takes this liquidity, dips back into this pool of liquidity, right? Think of this consolidation think of it like a store of fuel, right? And price is going to do one of two things. If you're coming into here low on fuel, right, you're either going to come into this low on fuel, grab your fuel, and that gives you enough for your journey back above, right? Or you're going to come into this, there's not enough fuel, you stutter around, come back below. Then what happens? You then come back and retest it to fuel up again. If you're then going to come back below here, that's when you've got your high probability setups to the low side, all right? But again, always with confluence, guys. We always want to know where our key levels is. Where's price going to run to? Where's it hunting down liquidity? Because when we know that there's too many buyers here, for short sellers to sell, they're going to look for the next opportunity to sell, right? And that's where buyers are going to take profit. So if we start looking at things like this, we see this impulse move up here. We see the breakdown here. This is the move, right? This move here is the move that led to the break of market structure. So what do we want? We want the order block, right? Which here on the 1 minute, what I'm doing is I'm taking the last impulse move up. Let me zoom in so you guys can see that. I'm taking the last impulse move up, which are these 3 white candles here, which represent 3 bullish candles, and then price is coming off. So when I'm buying down here, my target becomes this here, because if these buyers and smart money are looking to make the most of this move, they're going to offload positions here. And if they don't, well, perfect, because what have we got here, guys? We've got a perfect excuse that if price comes up, does this, dips back into this to grab the liquidity, gets back above, then we are in business, all right? Because we're saying to ourselves, price has now flipped this. So the sell orders have just been overridden. Too many buyers are stepping in. If it retests it, we flip it like a support and resistance level, then bang, we can get that big move to the upside. Consti, Darren Alexander, thanks very much, guys. Really do appreciate all of your support. And you guys listen to me jabber on twice a week. Really, really do appreciate it. So we've got our key levels there, right, guys? I hope that makes sense in terms we're just waiting for price to tell us what it's going to do, Now, I know some absolutely incredible traders, and I'm very, very fortunate to work with a lot of them and to know a lot of them. That I do work with, right? Because obviously trading is one of those things, especially in the crypto space, right? Not so much in traditional markets, but in the crypto space, it's all very digital, right? It's all online. You meet people, you become friends with people that you haven't met in years and years. Then when you do meet, it's like fire, right? That's the great thing about these networking events. Won't go into it now, but if you get a chance to go to things like Beacon or, Token 2049, these type of events, make sure it's specific to your field, right? And it's what you want to do. No point going to a conference about tokenomics if you're a price action trader that doesn't want to learn about tokenomics, right? Have a broad view of the market and a broad knowledge, but make sure you're diving very, very deep into what your specialty is, okay? But before I digress, just a huge shout out to all of those people that have given so much support across the space. But do come check out the Traders at the Nest. Come and check out our boys. I'm going to do a shout out to everyone on Twitter later. From everybody, Dank, Phoenix, JJ Cycles, obviously Jimmy Burb, Bast, Razoon, Pedro, just all of them. Jay Trader, Julian, they're all absolutely sick. I'm going to put a list together later and it might be quite a long one, but do go and check them out if you're there, guys, because you can learn so much from these people. I'm a price action trader, right? But going along to this event taught me so much about the deeper dive into the tokenomics, the deeper dive into the blockchain, potential gaming space, things that are coming up. So it's really, really exciting. But I digress. Back to the charts, keeping it simple for me, just looking for levels to get run, waiting for price to come in and tell me what it's ready to do, right? So now when you get into this level, right, even if you don't want to wait for this pullback, or you do wait for this pullback, but you want to wait for further confirmation, you can wait for the structure break. So you're coming back up, taking out the highs that took liquidity from the lows. Or, as my very good friend and just an absolutely sick trader who we had on the show last week, Razun, right? So make sure to come and check him out, guys. I tell you what he would do right now, although he'll kill me for not having the 0.55 level on here, right? This is what he'd be doing, the sicko. He'd be taking a Fibonacci of that, right? So what have we got here? We've got high time frame confluence, right? Telling us that price is ready to move up. We've got our support resistance levels. We know where our range is. We need price to step back within the range, right? Which is this thick red line here. So price comes up. In doing so, it holds this level here, right? This consolidation. This is where price has then dipped into to find more liquidity, and it's pushed up. Now, if you don't want to just play it on the breakout here, what you can do is, now we're in that structure. Here's our low, here's our high, higher low, higher high. Well, if our bias is bullish, yeah, then all we're saying is we take our Fibonacci from the low. Let me zoom in a little bit more for you guys. Take our Fibonacci from the low to the high, and I personally look for the golden pocket here, or the golden ratio, which is between the 0.618 and the 0.66, right? You can place limit orders there, or you can wait for price to come in, and you can look for like your bullish hammer candles, right? So you've got a nice sell down into here, bullish hammer candle here, or a bullish engulfing candle, or an inside bar breakout. I would be absolutely all over that. All right. So I hope that's been clear, guys. I know we've drilled down in some really low timeframes here, but let's always remember that we're playing a high time frame bias. All right. So we're not just looking at these levels and saying to ourselves, okay, let's just dive in because we've run the mother bar low, right? We're saying, okay, we're painting a picture, we're telling a story. So for me, I think at the moment, I'm waiting for price to come in and run the 50 line. Yeah. Or I'm waiting to see if we break down further and we come back down towards a mother bar low. I think if we continue to push down, we can see by our blue trend line here, yeah, that price is just struggling. And when you look at it on the higher time frames, look at these wicks, yeah, these wicks are showing us that the pressure is coming in and it's forcing price downwards. Tony, my good friend, with a wick down like that, how do you consistently determine whether to read it as a liquidity grab versus reading it as a lower low or market structure? Very good question, Tony. Are we talking about the 1 minute chart here? Let me give you an example if that's the case. So for me, the very first thing that I'm doing here, right? Now, I think Tony's either referring to this. Yeah, hey, Tone. How's Oz treating you, buddy? Is this what you meant, by the way, Tone, on the 1 minute chart? But either way, but Tony raises a really, really good point, and I get asked this quite a lot, which is when you've got a bullish bias on the high or the medium time frame here, then price starts to break down into a bearish structure. Obviously, it all becomes really easy when we're looking at the charts like this, yeah. Which is why I always say to people, look, just really make sure you're back testing these things, yeah, and just compress the chart, right? Do yourself a favor when you're back testing. Do this. Yeah, so you can't see any of the price action. And then just flick the chart back to just a really random point. Yeah. Then when you expand the chart out, right, you find yourself in a level, you do your high time frame, your low time frame, and then you can kind of make it so that you don't see the price action ahead. Because in truth, in my opinion, some of the very best place to enter positions look like some of the worst. Yeah. Because you've got yourself bullish here and you're saying to yourself, okay, we're playing this off the divergences. All right. We've got our confirmation. We've now broken back within the range. But look what's happened. Price has just broken down outside of the range. So then you're saying, okay, Christ, well, now how do we get our confirmation? Is this just a liquidity grab, right? Or is this price just setting, which it has done, set a lower low? So now we're bearish on this time frame, right? And remember, guys, price is fractal. If I didn't have the minute chart on here, you'd be very, very difficult for you to say whether this, or anyone to say whether it's an hourly, 4 hourly, daily, right? When you look at patterns, you see the same fractal nature of patterns. In my opinion, it's because it represents human psychology, right? So the buying and selling, the ebb and flow of markets. But however you want to look at it, and whatever you want to look at it for, this is currently bearish, right? So, like I said, we want our touch points. We want to be consistent. So let's just draw that one in there. Let me make that a bit thicker for you guys, actually, because I'm not sure you can see that overly clearly. And do let me know if this is going in. All right. So here we go. Got this? Right. And now we're looking at this as well. And if we've drawn that at this point, we've got a bull flag forming, right? So one of the things about trading, it can be super, super counterintuitive. Yeah. So what you're saying is you've got your bullish bias, you've stepped in. Here's our beautiful purple arrow, which tells us that we want to be bullish here. Yeah, because we've based that on higher time frame divergences and the fact that we're holding these lows. Now, we've got really, really clear targets, right? So we've come down here and we've taken out these lows. Yeah, the lows that are resting below here. And we've come back down into this pocket of liquidity. So now we say to ourselves, okay, well, if we want more confirmation, let's wait for ourselves to get out. Yeah, chop around here a bit, wait for that bullish market structure, wait for that retest like we've been discussing, right? And then from there, we can be reactive because we know we've got our bias in place, yeah? So even at this point, and let me just get rid of these, stop it being so messy. Knew I was going to do that. Right, so this obviously doesn't want to go anywhere. Let me draw this back in. Right, so we're down here. We've got our falling wedge. Now we've got our breakout, right? What else have we achieved with this breakout? Well, we've also come out and we've taken out this high. Yeah. So what have we done? We've broken out bullishly, yeah, with an impulse move to the upside. We've taken out, we're now back within the range. We can now treat this as a deviation, yeah? And what we say to ourselves here is you're either going to take a higher risk play, yeah, which gives you a better risk to reward, but you have to accept the fact that the chances are you're probably going to get a lower win rate. Pardon me for a second, I'm going to pour my tea. Very British of me. That thing's been brewing for about 20 minutes, so that should be a beast. Right, so we've got that. So you can wait for price to hold up here and push up, targeting that first of all and looking for a clean low below here, right? But really what we're kind of saying with this move here, sweeping the lows of the mother bar, is we're looking up here for our targets, right? And we've drawn this out earlier. This is our ultimate target, yeah? So now if you want to get in here, the key for me is just having a consistent entry method, right? So we see here as price plays out, we come back down. Now we're coming back down on the retest, right? So what we can say to ourselves is we've got our low, we've got our higher, we've broken this higher. Now, if we set a higher low here, as I said before, we can take a Fibonacci of the low to the higher, play the 618, and then look to play it to the upside. Or we can look for a retest of this level, which also gives us confirmation from the outside of the bull flag or the falling wedge. Then we can wait for price to come back in, and then we can look to enter. All right. You can take an aggressive entry down here, or you can wait for market structure to get in your favor and then take an entry slightly higher up. All right. So I hope that makes sense, guys. For me, I'm a fairly risk averse trader. I like to wait for the market to come into a level that I understand, and then I want to watch the reaction to how we get into that level. All right. Let's just get rid of that. So does anybody have any questions on that? And Tony, did that in any way answer your question, by the way? Or did I just absolutely dither around that and not really cover it? But yes, the one on the 1 minute, awesome. So with this liquidity grab, basically to kind of try and answer that in more simple terms, rather than waffling on like I have a tendency to do, is yes, if you see a big downside wick to this, one of the other telling things about these, is this wick itself. Same as this one, right? So think of it like this: the volume of the move is in the body, and the wick is where price has tried to get to but has failed. Yeah. So these are often deviations or pushbacks, right? Now, I don't really like giving this example actually, but it's so good. I don't really get involved in the political side of stuff. You know, obviously I send a lot of love and support all that I can over to Ukraine with what's going on. But look, I've got wonderful friends in Ukraine and in Russia as well, right? So that's not my business to get involved in. The reason I raise that is because this is a military style explanation, right? So take it as you will. But for me, the explanation is really, really good. It helped me always think about this, which is if you've got an army marching forward here, right, into opposition territory, what the body tells you is their actual advance, right? So what they actually managed to achieve. What the wicks tell you, let me zoom in here. The wicks tell you what they tried to achieve, meaning that what happened was they pushed all the way in to the opposition territory here, right? But the opposition territory wasn't easy to take. So they got pushed all the way back to here, right? And that's where it finished. So that for me is then why I like to make this kind of a key point of interest, yeah? Because if we look at this line, what we can see is when price got forced down into here, what we want to know is, can it hold here? Yeah? Can it hold? Straight down. In which case, I'd be looking for these lows to be taken out, retested, and then move lower, right? Looking for entries round about here. Because at the moment, what this is telling me is there's a lot of buyers. There's a lot of buyers forcing this selling army back, forcing it back, forcing it back. But then also these downside wicks, or the wicks that are coming from the upside to the downside, are showing us that there's selling pressure. That leads to this, which is this big consolidation, all right? And then when we get consolidations, we're then looking for expansions, right? And that's what happens. We consolidate here, we have this pump, but again, we meet selling pressure, right? So then price kind of chops in and around here, gives us confirmation here that we're ready to go out. This breakdown is on. And to answer Tony's question, absolutely right. Wait for your market structure break, yeah? When you've got that confirmed, get your Fibonacci's out and take a Fibonacci level, either targeting the 0.5 if you're conservative, or the 618, or if you're Resume, the 655, which is a really cool level he uses. So I really suggest anyone go and check out his stuff, or our video from last week where he explains it. But just be consistent. For me, I prefer price action. So I'm looking for price to come down, take out these lows, close above these highs, and then I'm looking to enter. All right. And what we can see here is when we come into this high, this kind of breakdown, this bearish move before this impulse move higher. Again, if we're looking at this in terms of like order blocks like we did below, well, here's the sell pressure that caused the impulse move above, again, taking out the previous high. Price then comes down into this, yeah, takes liquidity from here before it has a much larger impulse move to the upside. So, sorry guys, just got a few questions here that I want to look at. Also as well, we're pretty much wrapped up with BTC here. I'm going to push on to DXY and take a little look at ES while I've got you all here as well. But if you guys do have any chart requests, anything you're looking at, please do let me know and we'll take a couple at the end of the stream. Yeah, Joe, agreed completely. It was a really good question by Tony. He does come on and fire on some absolute buttes. Neil, thank you very much. Consti, thank you very much. Thank you very much, Tony. Consti, where do you trade perpetuals? So at the moment, just about to kick off a partnership with Femex. I traded with Binance for years. You traded with FTX. One of the tricky things at the moment about being based in London, even as a professional trader, is it's very, very difficult in the crypto markets since the new UK legislation came in and basically trashed not only the finance sector, but really, really kind of put a kibosh on people futures trading. British government, very, very happy to take all your money and do very little in return. Especially, pushing that towards the wealthy, happy to squeeze the middle class. I did say I wouldn't get political, didn't I? But that is true, in my opinion. Problem is they want to rip futures away from everyone, people that can genuinely build themselves, financial freedom and a future. It's in the name, really, but they're happy to push gambling and betting companies all over the place, But very, very sad. But I got registered as a professional trader with FTX. Consti, it's a nightmare, isn't it? I used to love trading on Binance. Really, really cool exchange. To be honest, guys, one of the things when you're picking an exchange, make sure you do your research on it, make sure it's safe, make sure it doesn't have key outages, make sure there aren't any questionable skeletons in the closet for the history, especially recent history as well. And also what you're looking to trade. If you're looking to trade FT, if you're looking to trade FX and you want one that's going to kind of go cross-compatible, FTX do that, Prime XBT. I really like Femex though. I like the interface. I like the exchange. I like to scalp, so make sure you've got one that's fitting for you. If you're someone that likes to hodl a lot, you like to trade, you like to invest, then have an absolute eye on companies that have got lots of those tokens, right? Or, going down onto other exchanges and bits and pieces, that deal in a lot more of those. You've obviously got all the swap companies out there as well. But just make sure you're doing it for what you want to do, right? If futures is your thing, if you're looking to scalp, which I imagine you've got an interest in, especially if you're on this stream, then just make sure you've got good volume, and the core assets to focus on. But do yourself a favor as well when you're looking to scalp or day trade anything. Get yourself on here, right? If you're feeling bearish, look at the coins that have run the hottest, right? Like we've got Maker here, for example. All right, Wild. Now, I'm not saying I'm bearish, ENS, right? But if I was, what I'd be looking for are the coins that had kind of pumped the hottest. And then I'm going to click on them, right? Like we can do that here with ENS. Pop on that, rip that up, take a look at what the volume is, pretty low, right? So you can say to yourself, if you're wanting to make trades off of micro moves, yeah, like which is the nature of scalping, then you just want to make sure that you've got you've got the volume. You've got the volume in there, all right? So does anybody have any chart requests? If not, I might just take a look at ENS here, just in case anyone's got any interest in that, or we can maybe take a look at Sol. I do absolutely love Sol. Brilliant to trade. But again, you've got to be careful with these volumes and stuff. As you get into the 1 minute charts, you can see on certain exchanges, even on Binance at the moment, it all becomes quite regimented. Look at the candles, right? Consti, Jojo, Emir, Sunny, thank you very much, guys. Really, really appreciate all your support. Been awesome having all you guys on here today. So does anyone have any thoughts for that? If not, I can always take a look at ETH quickly, give you my thoughts on ETH, get all of my scribbles away from here. There we go. So this is what I would do personally, guys. If any of you are interested in this, then I will show you. So I have been testing some new strategies on ETH. So you are going to be seeing all of this, which I can just get rid of. So bear with me 1 second and I will just put all of this away. Here we go. Right. So let's have a look at what we've got. Tony. Yes. Yeah. Oh, absolutely. Oh, fine. Well, let's leave ETH then. Tone, I will take a look at USD JPY in a second for you, mate. And then, let's look at Lunacy, right? So I don't know if you guys are aware of a guy called Bull B&B, who I had the pleasure of meeting at the Binance conference. Real character, and just the guy. Do you know what I massively respect about him? He hugely puts his money where his mouth is. We were out with him, or as a collective, and the guy was, $600,000-$700,000 up, $3-4-5 million into Lunacy. And has just been making an absolute killing on it. And fun enough, message this morning to say, make sure you get your bags filled with Lunacy. And I haven't actually. It's not because I don't believe him, and I absolutely do. And you should check him out. Real character. But it's just not the way that I trade, right? I trade price charts and price action. So let's see if, and I'm sure I should have been paying more attention to this. So very, very quickly, I've got these bits on here, but let me just hide these, right? Let's start with a clean chart. What have we got? 15 minutes. Let's smash this out, all right? Let me just deal with this, first of all, just from Emir, right? So it's a very good question and something that's kind of worrying a lot of people at the moment. So how bad is the Credit Suisse thing going to affect us in the crypto world? It's very, very difficult. A lot of people are comparing this to Lehman Brothers, right? But that was very, very different, in my opinion. I think it could be a catalyst to the downside, but I also think that we're in, for most risk assets, which crypto is definitely a risk asset. I think that we're in that kind of mode anyway, right? Now, this is going to look a little bit different when we're looking at Lunacy here, right? Which we will absolutely look at. But if we go on to something, say, like Bitcoin, and we look at that on a weekly, well, it paints a very, very different story, doesn't it, of just brutal downside action. All right. So while I do think that's going to affect us, of course it is. The market does have a way of kind of pricing these things in, which I know is a term people say like, oh God, man, come on, pricing things in, blah, blah, blah. But it's true. The big hedge funds, the big institutions need to kind of make decisions on these and find out how bad it is. Unfortunately, with things like that, we very rarely know how bad it is until it's too late, right? Because the institutions will be clearing their decks and bits and pieces like that. But I have a feeling that there's going to be other challenges coming up for crypto, all right, for risk assets. So for me at the moment, I think the very best thing to do is to trade level to level, right, using lower time frames. And then just to answer one more question which came in terms of do I use indicators? Jojo, yeah, absolutely. I like using the RSI. which I have one here that I kind of draws in the divergences, right? And then I am also, if it ever loads, it's my bit of my dodgy Pine script in there, right? So it probably hates life a little bit at the moment. But for me, I use the B Pro, right, which is the Burbicator Pro. It's available at the Burb Nest. I use it mostly for divergences, right? So let me pop this on for you, and you can see the power of these. So again, always with a bit of confluence, guys. And before I digress too much, and I will do the analysis on this, right? But just bear with me. And this is actually a short that we took on Luna C, right? So we get our bullish divergence here, right, which confirms on the next candle. So how do we know if we want to jump into this one or this one, right? So what we're doing is we look for confluence. So here we can see we're stacking bullish divergences down here. We've got our high time frame confluence, which is up here. So then we're saying, okay, we've got our divergence. Price looks like it could be ready to move its way up here, right? But what I like to see once we get that is seeing a sweep, right? So if we want to move down onto the lower time frames, we can wait to see confirmation that the liquidity has been swept from these lows, right? Sorry, let me zoom in again. The liquidity has been swept from these lows, and then the price can then get back up. Now, what we're not looking to do is we're not looking to, let me mark these and I'll show you. So what I like to do is look at the daily. And unfortunately, we don't have a lot of data on Luna C, right? So we're going to have to take the 4 hour as our thing. Sonny, you're absolutely right, mate. Someone is at the door and hopefully delivering my new keyboard, but somebody else is going to deal with that. So here we go. We're on the 4 hour. This is what we're taking as our high time frame divergences. So we've got these two. We've got our RSI, which is starting to move bullish as well, right? So we can go up there, we can see these lows, right? And then we want to come out and we want to take out these highs. So if we pop this into replay mode, what we're then going to do is we're going to look for confluence on a lower time frame, right? So if we drop ourselves down to a 15-minute time frame, we can do something similar, right? So we can drop ourselves down onto the 15-minute time frame. Here's our go arrows, yeah? So what we're saying to ourselves here is we've got a 15-minute divergence here, which sits in with our 4 hour divergence, both on the B Pro. We've got our RSI down in oversold. I'm interested in scalping long here. We've got 4 hour divergence here, 15-minute bullish divergence here as well. Again, the RSI down in oversold. Price is looking to push higher. All right. And how would I trade that? Let me just pop the B Pro off here because 1 minute divergences aren't really my bag. So if we just take this one as an example, again, I'm looking for momentum here, right? And I'm looking for the market to tell me that it's swept liquidity before it's ready to move higher. So what do I want to see? I want to see the RSI down deep in oversold, which we've got here. I then want to see a liquidity sweep of the lows, which we've got these lows over here, all right? So if we take these lows, what I don't want to see is price come back down and close below here. If we then take out this low, then I'm targeting lower prices, but we don't. We deviate or liquidity grab from down here. We close back above, right? And then when we take out this high, we can then look to long this, all right? Or you can wait and you can be patient. You can say to yourself, okay, well, let's look at this leg up, this big impulse move here. What can price tell us if we want to move higher on this? Let me move this away from the range. All right, golden pocket. Big impulse move up. Price chops around a bit, comes back down into our golden pocket. What do we get? Price back down in oversold. Zoom in on that for you guys. Price back down in oversold, big push up higher. All right. If you wanted to be even safer, then you can take a look at this. You can say to yourself, all right, market structure. So here we've got the low. We take out this high, right, taking out the market structure here. Then we can say to ourselves, right, close above this, retest. There's our trigger to go long, all right? Sorry, shit arrow, right? There's our trigger to go long, all right? So there's a couple of things. You've just got to have consistency, right, with how you trade these kind of moves or any moves, right? Because it's one of those things that a lot of people I see can kind of read the charts well and they can take a look at these bits, but then when it comes into actually executing on them, they're not really sure about what they're doing in terms of execution. So that's where it gets a bit tricky. So for me, you just want to know: are you a user of Fibonacci's? It's something I'd highly recommend people research. I think they're super, super effective. Or if not, then you can just wait for, very similar to like I do. You wait for your market structure shift. You see the high, you wait for that to get taken out, you wait for confirmation that you're going higher. Once we close above this high, you can then look to push up further. Same way as when we get down to this level, we're just playing our divergences and we're saying, okay, is price going to take liquidity to the low side? Yeah, fill the buy orders and have this big impulsive move up. Or if it comes back down to here, right, and it can do exactly the same, it can push back up into this like it's done here. But then if it breaks back down, yeah, then what we're saying is, okay, if we're going to start coming back underneath this level and going down, this is where we can start getting our triggers then to look short, right? Because the market's telling us that's what it wants to do. And then what we need nice clear targets, right? Like these lows. And if we're going to trade it down, we've got a nice stop loss above here. So we know exactly where our risk is. That's the high that broke the low. We're entering down here. We've got like a 1.5 hour trade, scalping it into that level. All right. That's how I would look. That's how I would look to trade that. Okay. So just so you guys get an idea of how I see the market. Now, because I've obviously digressed, which I absolutely love to do, let's take a look at this. So on the 4 hour, we've not got any clear divergences at the moment, which is fine. We've got slow, steady price action that's kind of grinding up as well. Let's have a look. Piotr. Apologies if I pronounced that wrong. Yeah, so can you explain how to spot hidden bullish bearish divergences? Anytime traders say they're waiting for a trigger, can you explain what that is for you? Yeah, absolutely, mate. So that for me, in terms of that, for my trigger is waiting for that low time frame move. I'll show you again on another chart, but I'm waiting for, if we've got a level, right? Let's say that's our key level. For me, I want to see one of two things. I want to see price either come up, deviate above it, yeah. Then when it closes back down, I'm then looking for bearish market structure on the lower time frames. Yeah. And then that there would be my trigger on the retest. All right. For bearish. And then for bullish, if we were still coming up from this, I'd want to see this reclaimed, right? Probably dip back down into here, start getting above here, right? And again, when we start taking out these highs that we're setting and we retest it here, this then becomes my trigger to go long. But what I'm looking for in terms of the lead up to that is I want to see and I want to understand how price is moving. And that involves everything from these candles, right, to how the price action is moving to support and resistance levels as well, right? Now, I've got no problem moving support SR levels because, to be honest, if you'd had this and you'd drawn this in here, this would be your second touch, right? And you'd be like, okay, price is moving up. Oh my God, it's broken down. How do we know not to go short here? For me, really, really simply, you just want to see these lows taken, right, before you then kind of had any short confirmation. If that was a breakdown of that level, price came back down, undertested here, right? Then when we lose that low, that's when you can start looking for your short opportunities there, right? But obviously, as this develops out, we've now got a very different move here, right? Which is this. And that for me on a 4 hour is pretty much as clean as you can draw that. You've got your anchor point here, you've got your touch point there, hasn't violated any of the bodies. Now the question is this a deviation below this level? Yeah. If it is, great, because we've got really, really clear targets. If we're trading this on a 4 hour, I'm looking at that, right? Because there's the high. That acted as, let me zoom in again, that acted as resistance. Deviation sells off, resistance again. Price now comes up, reclaims this and starts moving higher. Again, that's where we can start looking for triggers, either on the pullback, using a Fibonacci or using a low time frame market structure pullback, or you can market order as well on, say, a higher time frame if you've got like a bullish engulfing candle, all right, or a pin bar, or like I said to you guys earlier, like Bast does, right? You can get the first candle, you get your first bullish candle, then you can wait for the second one for confirmation. This is a great example of that here, right? So we get this beautiful bullish engulfing candle here. Now you could enter here, right? And let's just put a long position on this and I'll show you what I mean. So you could enter on the close of this candle. You can say, right, we've had our bullish engulfing candle. Awesome. Where's my risk? You're being very brave or possibly foolish to put it under there. You'd need to be putting it under here as a minimum, really, or possibly even under here. But let's say best case, you're playing it loose and you're saying, okay, I'm going to put it under there because if we break down from here and we start looking towards that stop loss, then, I'm done. Now, if you're entering there, and let's just say, for example, this is our target, right? We've got a 1-for-1. Right, we're targeting here. Now, if we enter there, fine, we're in, no problem. But if we wait for that secondary confirmation, we're waiting for that next bullish engulfing candle on the higher time frame like this, which we get here. Then we flick on our RSI and we say, okay, compress it up a little bit. What's the RSI doing? Setting higher highs, higher lows. It's above the 50 line, which is bullish. It's showing bullish intent to push up higher, right, into overbought. So you then just wait for the secondary confirmation candle, which we get here, yeah? So we get that second bullish engulfing candle here. All of a sudden, we've brought our entry down to here, yeah? So our entry before was up here, which gave us a 1R trade for 13.2%. Or we're trading it from down here, in which case we get an almost 2R trade for almost 18%, right? So sometimes patience can be very, very well rewarded in trading, all right? And if you miss an opportunity, accept the fact that it happens. Don't get annoyed with yourself. Congratulate yourself on getting the TA side of it right. Yeah, that's the key. So I hope that's answered your question, Poeta. If you would like to, mate, come and give me a ping on Twitter, or if you're over the nest, come and grab me in the chat. But either way, just come and drop me a message if I've left one of my morning posts this morning on Twitter or something, and just tag me or just answer one of the messages about the divergence. I've got really, really cool divergence charts I'd be happy to share with all you guys. Not really sure the best way to do it here. I'll maybe add it into the stream next week on YouTube, but they're really, really cool charts, teach you how to read bearish divergences, bullish divergences, hidden and regular, and then you can start kind of picking them up. All right. So, right, there we go. That is over and dusted. I really hope that's been helpful, guys. And then YouTube users, how many years do you take to get so competent with TA? Love your delivery. Thank you very much, YouTube user. So I've been kind of playing about with the markets for quite a lot of years. I started taking it probably, I would say, really seriously about 5 years ago. I was running businesses before, my own businesses here in London, which I had reasonable success with. But yeah, I got bitten by the trading bug, really, really loved it, wanted to take it seriously. So I sold the majority of my shares in my two businesses, which bought me enough to take 2 years off of work. And then I just approached it like I would approach anything. I wanted to be the best trader I could be. I found the best traders I could find. I found people like Burb. I found people like Trader SC, people like ICT. And then I just, that's what I did. I then studied 8-10 hours, 5 days a week. And then I started studying under people. I was very lucky to find kind of a really good family of traders that I still keep today. And I just worked my socks off. And there's no real shortcut, guys. Just, I know a lot of you guys are holding down really, really demanding jobs and that. Just do yourselves a favor. If that's what you're doing and that's what you're looking to push towards, is find your niche, how you want to trade. It's great having a broad knowledge, right? Which is brilliant. You can develop that over time, but find a niche that sits with you, one that you're really focused on, one that you really understand, and then find the traders that trade that way. Not these shillers and stuff, people that are sharing amazing content, right? People like my family over at the Bird Nest, right? People like Trader Dank, people like Trader SC, right? There's loads of them out there, Crypto Chase, these guys, they're seeing such alpha, right? Go and check out Phoenix's chart, JJ Cycles, right? I'll put a post out later, guys, tagging these people in, but just trust me, from years and years in this industry, it takes a long time to find people that you can trust, people that have the knowledge that can really, really help you, all right? And as you can see up here, set your alerts, right? So look, ping, 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 Aave, Atom, AVAX, FTM, yeah? Now, these are unconfirmed 4-hour bearish divergences, right? So now what we say to ourselves is we're now waiting for the next part of this cycle to end. If we get this confirmed at 5 p.m., which is UK time, or 4 p.m. UTC, then I'm going to be looking for short trades on that, all right? So just to finish up very quickly, because I've got a good friend of mine that we're working together and we're about to jump onto a show at 1:00. So just for someone that asked about lunacy, and guys, apologies if I haven't got around to looking at your charts, but do come and hit me up next week. I'll make a little bit more time for it. Or actually, I'm live Wednesday, guys. Come and grab me Wednesday. We can have a super long session Wednesday. For me with lunacy, this is what I'm looking at, right? I'm looking at this line here. I'm looking at a 4-hour being up in oversold, overbought, sorry. So for me, this is actually quite nice and simple. I'm looking in and around this kind of level here, right? Let me draw this with a box. If I'm looking for the key SR, where's been capping the market from here, right? So I'm saying to myself, right, if this is capping us to the downside, that's what we want to look at to break above it. What's capping the upside? In my opinion, it's this, right? So Luna C, if we get this breakout, hold above, push higher, look for the pull back into this area here for some scalp longs, but know your targets, know what you're trading up into, right? Look at this high here, look at these highs here, right? So make sure you know where you're trading into, okay, guys? Have nice, clean targets. And then the opposite for the downside, right? If we come up here, grab some liquidity, come back down, retest this, and then start to sell off, then I think realistically we've got this here, see this kind of fast move here. We could blitz through that, and then I'd be looking at the order block down here for price to come in and for some kind of reaction. If we started breaking below that, I'd hold the bearish bias, but I would short trade into this, take the breakdown, and then I'd close out the position here. If it shows me more weakness, I'll then take the trade as we break down lower here. If it shows strength to get back above here, then we know we've got a decent long bias to head into the week. So I'm afraid I've got to shoot, guys, but genuinely thank you all, so many of you on the live stream today. That was absolutely amazing. Absolutely amazing. So thanks very much for your feedback. Thanks for your charts requests. Apologies to anyone that I didn't get around to seeing. But like I say, I'm back on Wednesday. Ping me up on Twitter if you're interested to know more about divergences, hidden and bullish, and I'll share hidden and regular, bullish and bearish, obviously, and I'll share some charts and bits and pieces with you and some really helpful infographics that can help you try to spot them, all right? So once again, thank you, all of you, for your support. I'm going to be live again on Wednesday at midday UTC. So do come along, join the stream. I look forward to seeing you all. Have a fantastic week. Trade safe. Remember to use good risk management, guys. I'm wishing you all a really, really prosperous weekend.